Welcome to the Crypto Breakdown Show, your guide through the fast-moving world of digital assets. We break down the latest market moves, industry trends, and the big stories shaping the future of crypto. Just a quick reminder, this isn't financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. All right, let's get started. Recapping some of the top news from October 8th. Buckle up, we've got major crashes, mind-blowing rallies, and whispers of a Bitcoin price that could make gold look, well, just gold. Alright, let's cut straight to the chase. Bitcoin just rebounded above $123,000 after a bit of a dip, but not everything is sunshine and rainbows. We saw XRP take a tumble, Dogecoin do a swan dive, and $500 million in bullish crypto bets get liquidated.
Ouch.
But here's the kicker. Institutions are still buying the dip like crazy, and the BNB Chain is practically minting memecoin millionaires. Plus, a major stablecoin showdown is brewing in Washington. Stay tuned. Imagine this. It's a Monday night, and everything's looking pretty good. Bitcoin is flirting with new highs, and everyone's feeling bullish. But then, suddenly, a wave of selling hits, and XRP, our old friend, takes a nearly 4% hit, breaking below that crucial $2.99 resistance. Traders are on the edge of their seats, watching to see if it can cling to the $2.85 support. It's almost like a nervous energy is in the air, especially with Ripple awaiting a big decision from the OCC about its U.S. national banking charter. It wasn't just XRP feeling the pinch. By late Monday, a whopping $500 million in bullish crypto bets got liquidated across the market. Talk about a reality check. And then, a little later, Dogecoin plunged a swift 8% as whales started taking profits at the 27 cents resistance level. It was a classic sell the news scenario, even though late buying did manage to stabilize at around 25 cents. The meme coin market, especially Pepe, also felt the heat, with a 7% drop as traders sought refuge from rising political risks. Adding to the tension, we saw Bitcoin's short-term whales, those quick-moving big players, sitting on a record $10.1 billion in unrealized profits. You can almost hear the nervous whispers. Are they going to cash out? In fact, $5.7 billion already moved to exchanges, showing that profit-taking is definitely in play. And as if that wasn't enough, gold skyrocketed past $4,000 to a new record high, flexing its muscles as the ultimate safe haven, while Bitcoin dipped over 2% to $121,340. It seems investors were running for the hills, opting for the shiny metal over digital gold as the US dollar index hit a 2-month high.
Oof.
Even the bond markets got in on the act, with the Japanese government bond yield hitting a 17-year high. This creates ripples across global borrowing costs, potentially reducing the appetite for riskier assets like Bitcoin. It's a classic tale of macro pressures influencing our crypto world. But don't despair, because in true crypto fashion, there's always a rebound. Despite the dips, Tuesday saw a massive buy-the-dip frenzy. Spot Bitcoin ETFs alone raked in nearly $900 million, contributing to a $2 billion total for the first 2 days of the week. And spot Ether ETFs? They weren't far behind, pulling in over $400 million, marking their strongest day this month. Investors, it seems, are seeing these pullbacks as opportunities, not doom. Meanwhile, RWA tokenization is gaining serious momentum. Plume Network is acquiring Dinero Protocol to expand its institutional DeFi yield offerings, and KIO, backed by Brevan Howard, is bringing over $200 million in tokenized funds to the Say network. Imagine trading fine wine on the blockchain. That's exactly what CrewTrade is doing on Avalanche, tokenizing $60 million worth of collectible bottles. So cool. And in the world of payments, CoinFlow just raised $25 million to scale stablecoin payments globally, aiming to revolutionize cross-border transfers. Even Square is jumping in, launching Bitcoin payment tools for small businesses, making it easier than ever to accept BTC. Plus, North Dakota is getting into the stablecoin game with Rough Rider Coin, partnering with Fiserv. The future of payments is definitely digital. On the regulatory front, there's a glimmer of hope. The SEC is aiming to formalize an innovation exemption for digital assets by late 2025 or early 2026, a move that could be a huge win for domestic innovation. And the Bank of England is softening its stance on stablecoin limits, signaling a more open approach. This is big news for stablecoin adoption. Finally, some exciting developments for individual chains. Ethereum's Fusaka upgrade is on the horizon, promising to cut node costs and ease adoption. HBAR is breaking out of its consolidation phase with hopes for a spot ETF. And XLM is rebounding sharply, fueled by institutional interest and its strategic positioning for the 2025 Fedwire and Swift modernization. It's a busy time for altcoins. Let's zoom out for a second. Today's market movements weren't just about crypto. They were heavily influenced by broader macroeconomic themes. The surge in gold past $4,000 wasn't random. It was driven by ETF inflows, central bank demand, and global geopolitical uncertainties. This flight to safety often pulls capital away from risk assets like Bitcoin, especially when the US dollar index strengthens, as it did today to a 2-month high. A stronger dollar makes dollar-denominated assets, including Bitcoin, less attractive to international buyers. And that 17-year high in Japanese bond yields? That ripples across global borrowing costs, further tightening liquidity and reducing the appetite for speculative investments. So, while we celebrate crypto wins, it's crucial to remember that our market is increasingly interconnected with global economic tides. These macro factors are key drivers behind the buy-the-dip moments and the moments of caution we're seeing. So, what's the big takeaway from today's whirlwind? While we've seen some serious profit-taking and dips in altcoins like XRP and Dogecoin, the underlying bullish sentiment for Bitcoin and the broader crypto market remains incredibly strong. Institutions are buying the dip, innovation in RWAs and stablecoins is soaring, and the BNB Chain is a memecoin powerhouse. We're seeing a push for clearer regulation, which is a positive sign for long-term adoption. Looking ahead, all eyes will be on upcoming economic data, especially as the U.S. government shutdown adds a layer of uncertainty. We'll be watching the CPI data and any further moves from the SEC and other regulators very closely. Now, for you. Given today's mixed signals of dips and massive institutional buying, what's your strategy? Are you buying the dip, taking profits, or holding tight? That's a wrap for this edition of the Crypto Breakdown Show. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you enjoyed the episode, be sure to like, subscribe, and share it with someone who's crypto curious. Thanks for listening, and remember, no matter where the charts go, stay grounded, stay informed, and stay crypto smart. Until next time.